simple investing portfolio on the planet, and an upgraded version of what Jack Bogle started many, many years ago. We just had to update that a little bit because his portfolio worked back in like the 1970s and 80s, but things have changed. But if you want to add even more upside and see that portfolio skyrocket, or get more cash flow, more dividend income, you'll need to add some specific sector to the portfolio. So let me give you a couple of very good options. And I made this channel to make investing simplified. Remember that all investing carries risk, so do your own research. This is not financial advice, and I'm not a financial advisor. So first, let's talk about more upside. Now, these types of sectors will be higher risk. They'll definitely be more aggressive, but they should produce much more reward. So let's just jump right into it. And number one, consider investing in quantum computing in 2026 because it's still early in what could become a trillion-all technology shift, similar to owning AL stocks before the boom. Major companies like IBM, Alphabet, and Microsoft are pouring billions into the space, while pure-play firms like IonQ are showing rapid revenue growth and raising guidance in 2026. Quantum computing has the potential to revolutionize drug discovery, cybersecurity, AL optimization, and finance by solving problems classical computers cannot. It's still speculative and volatile, but that's exactly why the biggest upside may exist right now before widespread adoption arrives. Quantum computing is one that I've been researching for quite some time, and earlier this week, I put out a video specifically on the best quantum computing ETFs out there. So after this video, I'll link to that one so you can watch it because I really do believe that we are at the beginning of a crazy technology similar to had you been invested into AL way back when it started. And speaking of AL, number 2 is all about AL, but not how you think. Not semiconductors, not NVIDIA or AMD. Memory. Memory is one of the most leveraged ways to benefit from the AL boom. Every AL server, data center, smartphone, and high-performance device needs massive amounts of DRAM and high-bandwidth memory. After a painful down cycle, the memory market has tightened, pricing has improved, and demand is accelerating as companies race to build AL infrastructure. Leaders like Micron Technology, Samsung Electronics, and SKH Hynix stand to benefit from stronger margins and rising earnings. Memory stocks are cyclical and volatile, but in 2026, they offer a timely mix of recovery plus secular AL growth. In that quantum ETF video that I was talking about from before that I'll link to at the end, I also talk about a very solid memory ETF that I just started investing in. Let's go to that third sector, and this one is all about crypto. Some may want to consider investing in crypto in 2026 because the asset class is becoming more mainstream through institutional adoption, spot ETFs, improving regulation, and growing corporate treasury interest. Bitcoin is increasingly viewed by some investors as digital gold and a hedge against currency debasement, while blockchain networks continue expanding into payments, tokenization, and decentralized finance. After multiple boom-bust cycles, the market's more mature than in prior years, yet still early enough that long-term upside could remain significant if adoption continues. Crypto remains volatile and high risk, but that volatility is often where major opportunity comes from. In volatile markets, many investors focus on improving their understanding of different financial products. Those that get ahead do so by learning much and researching deeply, which is why I really like the Insight tab here at 21shares.com. Thank you to 21 Shares for sponsoring today's video. 21 Shares is one of the world's leading crypto ETP providers, providing access to digital assets through exchange-traded products. Their mission is to bridge the gap between traditional finance and crypto, designed with a focus on security and collateralization, traded on global exchanges with a deep focus on transparency, compliance, and investor education. 21 Shares is helping bring digital assets into the mainstream in a responsible, sustainable way. Want to learn more about developments in crypto and digital assets? Subscribe to the 21 Shares newsletter. You'll get market insights, product updates, and trend breakdowns straight to your inbox. Follow 21 Shares and 21 Shares_US on social for accessible content, timely market commentary, and compliance-aligned crypto education. 21 Shares products may not be available to all investors and are subject to regulations in your jurisdiction. This is not financial advice. All investing carries risk. Consult a licensed financial advisor before making investment decisions. Now, remember, for all of these that I'm talking about, All these different extra sectors that I'm talking about in this video, what I'm hoping that you understand is the optimal way to invest, in my opinion, would be to have a core portion of the portfolio that's a lot bigger, and then a satellite positions that are a lot smaller. If they're going to be higher risk, you have to understand that yes, they could shoot off to the moon, but the reason they're called high risk is because they could absolutely go crazy downward as well. And so, you wouldn't want a large portion of your portfolio to possibly just get depleted overnight. I invest something like 80-85% of my entire portfolio in the broad-based, just normal ETFs that I always talk about, but then about 20% or so of my portfolio is these satellite positions of different types of ETFs like this, but also some individual stocks. So that's how I do it to keep myself about as safe as possible while getting as much upside as possible as well. So let's go on to number 4. And next is AL, like I talked about in number 2, but again, different than just semiconductors, different than just NVIDIA. What I'm talking about here is the AL infrastructure and picks and shovels of what will make AL run. It needs a lot of power. Consider investing in AL infrastructure names like Applied Digital, Iran Limited, and Nibius Group, because they sell the real-world backbone that AL cannot function without: power, data centers, cooling, land, networking, and GPU compute capacity. While chip makers get most of the headlines, AL models still need somewhere to run. And demand for electricity-intensive compute is exploding as enterprises adopt AL at scale. These companies are the picks and shovels of the boom, benefiting from long-term contracts, rising capacity demand, and scarce infrastructure assets. If AL keeps expanding, the biggest bottleneck may not be chips. It's going to be power and compute space, which is exactly where these companies operate. I believe that these types of stocks are going to be the backbone. They already are the backbone of AL, and there's so many companies pouring so much money into those. So that part of AL, along with the memory part of AL that I was talking about from before, are two places that I'm investing pretty heavy. Number 5. This one's all the rage, and I get a question about this just about every day. SpaceX should consider investing in the broader space sector because it can give you indirect exposure to SpaceX and the overall growth of the space economy. Even though SpaceX today itself remains private, public companies tied to launches, satellites, defense systems, communications, and suppliers can benefit as SpaceX expands Starlink, reusable rockets, and government contracts. As launch costs fall, entirely new markets like space internet, Earth imaging, lunar missions, and defense tech could grow rapidly. Investing now can be a way to participate early in a long-term megatrend before the sector becomes mainstream. SpaceX is expected to go public soon, and when it does go public, if it does even half of what people are expecting it to do, it's going to be added to things like the NASDAQ 100, like your QQQ or QQQM. Eventually, it'll get added to the S&P 500. It'll probably be in many different ETFs, so you will have exposure to it if it becomes as good as it's supposed to be. There's a lot of different ETFs and things out there that are starting to put things that kind of have exposure to SpaceX in a roundabout way, but watch out for some of those ETFs because the fees on those things are crazy. And then eventually, when SpaceX just becomes readily available in any ETF, you're going to want to probably get out of that ETF that you were trying to get into from the beginning, and you're probably going to have to pay some taxes. There's going to be some issues there, so just think about that strategy before going into anything crazy. So those first 5 sectors were all if you're trying to get a lot more upside. You're trying to get on trends, things that money is pouring into right now. But number 6 is a little bit different, and it's for those of you that just want to live off of passive income and dividends and just be able to sit back, collect a paycheck, and just be able to chill. And you can do it on way less than you ever thought. Most people think you need $1 million, $2 million just to live off of passive income. You actually need way, way less. And in this video here, I show you the math, the breakdown that you could do it on 300,000 and very easily off of 500,000. Check that out or watch this quantum computing ETF video from before that I was talking about, or watch both. And remember to keep investing simplified.